Okay, welcome to today's crude oil analysis video, getting you ready for the London session. But before we do that, let's kind of go over what happened today. And again, a huge congratulations to all of our members in our trading club who took these awesome setups. And again, this is something that I go ahead and share inside of our members area, trade after trade, trade alerts, especially with crude oil and gold, and just a massive day that we've had inside of the trading club again. But let me give you some massive value so you understand kind of what happened today and why we traded these areas here. First of all, we had talked about yesterday the high of the day had been broken. And last night when I gave an evening analysis, because I give our members both a day and evening analysis for those that trade different hours, we talked about price coming back up to this sell area and looking for a sell in this area, which is exactly what happened in the different sessions last night. Okay. And then price came back into this area. And the reason why I had marked up this area is because we had seen that previously this area had worked as a supply and demand zone. So we were looking for then a kind of a buy in this area right in here. And again, this was today, this morning. So price was trending down from this sell. And even though we had a bearish candle and this was going to be a counter trend trade, we were looking to see if we were going to get a bounce from this 77.50. The main reason why is at that time, right, price had not closed below this area. So when this green candle right here gave us this bullish impulse, right, that kind of signaled, hey, we're probably going to go higher. And so we jumped in on a buy and grabbed pips or ticks if you're on futures, buying crude oil. Then we came up to this level, and this was a very simple, we talk about this all the time. For those of you that are familiar, I use Fibonacci levels all the time, and we look for the area on crude oil that is between the 61 and the 88. We see crude oil push into these levels a lot more often than they do the actual 61.8. So we prefer to get a better price. At the same time, this allows us to have a tighter stop area, which would be just above the 100 fib level. So we got into our sell here. The sell fell again down into the zone. And then this was a huge candle on the 15 minutes. So most of us cashed out here. We are running a 20 pip challenge that we're securing 20 pips on a separate account. And I'm helping folks grab 20 pips each day so they can grow this long-term account in our trading community. So price came down, and then we really had to wait to see what happens here at that particular time. Now, at this time, this candle broke at about 10:30 to 10:45 in the morning, and then we had a buy entry down in this level right here. So the reason for that buy entry is because if we go over to the left, again, that was the next level of support and resistance in a huge demand zone. At the same time, I told our members that if oil was going to close below the zone of 76, 71 or so, it was going to completely change the direction of the trade, okay, of the actual price action. So we had perfect entry at the buy. We took another 20 pips up, and then price just came right back into our next zone to retest one more time. Now, by then, I was done trading, but we had some folks who were still trading and then took another sell in that area. So this was a great opportunity to kind of maybe learn over the last few minutes the different techniques that we use inside of our trading club in order to grab our 20 pips, 40 pips, whatever your goals are for the day. So now that the day is over, we need to hit this remove 30 drawings, and we are going to start from scratch for you London traders. So make sure that you stay until the end and kind of pay attention to what's going on, because the market just opened right now. Okay, so we are going to look at a top side. Obviously, this has been rejected. We have not been able to candle close above there, and then we are going to mark our lower level that we have not been able to close below these levels here. And that's the way we start to kind of put our game plan together. And again, this is a daily chart. We're then going to drop into our 8-hour chart now. And what we've done here for you London traders is that we have trapped price. Okay, we have trapped price in this area on the 8-hour chart. So on an 8-hour chart, I believe that we still have some downward momentum to go. So on the 8-hour chart, we're going to draw a Fibonacci from this top to this bottom. Okay, so if price comes back up into this area, we are going to begin to look for another possible sell opportunity deep in this zone if we get that high. I'm going to go ahead and change that color to this darker pink area. Okay, that is going to be best case scenario. As we drop into the 4-hour, right, we can see here that we did not make any newer higher highs, and we are trending down. Okay, we are definitely trending down. So in this case, I want to drop over to the 1-hour to see if I can give you an intraday opportunity. Okay, now that intraday opportunity, again, because we see this long candle here, right? We did have a wick up in this area. We have to account for wicks. I always account for wicks. So what we may see happen is we may just be in some form of a temporary consolidation until we get to London. So for London session, I will look for a 20 tick, or 20 pip sell in this area if we get up to 78 again. Okay. In the meantime, if over the next few hours, okay, price cannot close above that area right there, which is about 77.50 to 77.60, right? You can take a very lower risk opportunity to grab your 20 from there. Okay, because right now the price action is possibly indicating that we're going to go further down. And if you look right here, right, are we making this W pattern? And then if we close it, are we making this M pattern right in here? So on an intraday perspective, I could see us coming back to this area. Where's my circle? Because I can see liquidity sitting in these two candles right here. Actually, these three candles. So I'm pretty certain that we're going to come back to at least 76.32. That would be a target. Okay, once we close below this Fibonacci level, okay, that would be a target. And I'll go ahead and turn that into blue. But again, in order for this to happen during the next few sessions, we've got to see that candle come and close below 76.76. So if you get a candle to close in this area, okay, let's make that candle red because it would be a red candle. Then at that point, we do have a level here that we have to respect. And so because this level here was previous support, now it might turn into previous resistance. So we want to go ahead and change this level to white, keep it consistent. Actually, we'll keep it red there since the other ones are red. So if we do get a candle closure here, it's either going to be an impulsive move down, or we're going to see some type of retracement up and then back down to this destination here. Because again, I think as we go into, if it doesn't happen during London, I see liquidity here being taken out between London session and US session as well. So again, this will be the kind of the setups for the evening as you London traders prepare to do your thing while I prepare to take a nice long sleep here since I'm in Florida and I do not trade London session. I strictly trade US session when it comes to crude oil. Okay, I hope you got some value. If you did, smash that like button for me. I would greatly appreciate it. Don't forget that if you also are brand new here, hit the subscribe button. And if you want to join our trading club, head over to theprofessortrades.com. We'd love to see you there and get you your pips each and every day inside of our own club and app that you can download on iOS, Android, or you can use it through your web browser as well. Happy trading.